Chinese trade data under the spotlight. We saw Chinese imports up 56%. We also saw the exports rising 17.7%. So commodity prices doing quite well this morning.
Yes, and now you must remember China is officially the world's biggest exporter. They've overtaken Germany. So it's an astonishing way that the world has changed over these last 10 years. And also important is throw back 5 years and everyone would be vacillating and concerned about the US employment data released Friday. But because China has been growing so strongly and has emerged as perhaps the economy to steer us out of the 2008 credit crisis and then the subsequent downturn economically globally, they've been the strongest economy. So people have looked to them, and I guess these numbers might appear hot, and I think the authorities are going to have to take some serious steps now in order to be able to cool a little bit. But I think, you know, if you're looking for sustainability and you're looking for an economy that's going to grow, I wouldn't say double digit, but I'd say in the high single digits. I think China's probably going to do it for the next 5-10 years.
Well, let's take a look at what impact it's going to have on commodity prices. I mean, oil gaining ground this morning on the back of that trade data. Sasha, are you concerned that we'll see crude prices rising even higher from these levels, and perhaps this will be impacting growth in other countries?
Yeah, I think you must be careful because it was first fueled by the poor economic data out of the US, well, the worse than expected jobs number. Because after that, treasury yields and the shorter term yields sold off aggressively and the dollar weakened and commodity prices, so they were already a little bit inflated from that data. But I think yes, because if the real consumption from China is starting to exceed people's expectations, then yes, I love that insert in the medium term to test 85 and the long term 90. You know, I mean, who knows where it's going? But I did see earlier in the year some people saying 100 plus this year easily on the oil price. That's dollars per barrel. And I guess, again, it all depends where the dollar also goes over the year.
The rise in commodity prices are obviously boding quite well for the local bourse, JSE at around 28,300 points, a level that we haven't seen in around 17 months. So the JSE also doing quite well. Do you think the focus is predominantly going to be on commodity prices for the local bourse? Well,
we are dominated by resources. I think the better part, say about half of our bourse is dominated by the big players, the Anglo's Billiton, and then of course all the platinum producers and of course the gold producers. So yeah, we are dominated by resources here, so I guess it bodes well for local investors if you're just tracking the index. But you know, I think you can still stock pick nicely. Still like Billiton a lot.
What other stocks would you be looking at this year? At the start of the year, we're also hearing that financial stocks should be doing quite well, considering that most of the problems have been taken out of the system.
Yeah, it's interesting because globally you get the sense that we're still going to be in for cheap money, except I guess in Australia, where they've started raising rates.
So they're planning to rise rates again.
Yeah, and they will, because some of the first signs of retail arena is that it's been better than expected, and there were also some better housing numbers. So the Australian economy, and that's probably largely fueled by demand from China. So their exports. And just to throw back to that, I saw that they were planning over the next 5 years to export more iron ore to China, this is Australia, than they've ever exported before. So that's a massive number. So I guess with their proximity to China, they're going to do really well, and I guess see grow quite quickly, and that's why the Reserve Bank can perhaps raise rates a little bit more aggressively. But we're probably going to be sitting on at these rates for a while. The Fed have indicated that they're going to keep money cheap, at least until they see favourable signs in the employment. And I guess Jean-Claude Trichet, he's stuck between a rock and a hard place right now. Maybe you'll see rates start to rise towards the end of the year, but we're still going to be in for a protracted period of cheap money.
You mentioned Jean-Claude Trichet, ECB president. Eurozone unemployment currently at 10%. It's the first time we've seen those double digits since the euro was put into play around 10 years ago. So a little bit of a shocker coming through for Europe.
Yeah, happy 10 years for the euro, 10% unemployment. You're right. But it does vary. In some places it's in the high teens, such as in Spain. In other places it's seemingly coming under control. But because it's measured as one region with very different economies across the region, I guess it's the more, what do they call them, the pegs. That's Portugal, Ireland, Greece and Spain. those are the economies that have been relatively new entrants there and have grown enormously well, that are finding themselves in a bit of a tough patch right now.
Of course, it's the debt issues that everyone has to grapple
Absolutely.
with. Looking at the US unemployment, currently sitting at 10%, 85,000 jobs lost for the month of December. Interesting though, in November we saw 4,000 jobs added. Do you think that we could see quite a volatile number from these levels?
Yeah, positive print during the year. I think what you'll probably see is the first quarter. Well, that's market consensus, might be a little bit choppy, but you'll start to see recovery in the second quarter, and you'll start to see increasing positive prints. And people are suggesting that by the time we get to June, you'll be seeing 200,000 jobs created per month.